I think on the basis of, in terms of sort of day-to-day strategy, it shouldn't really make a difference unless the market is really, really volatile, what those conditions are. That might sound a bit bizarre, but you know, if you've got your methodology correct and you're literally just trading with stop losses and allowing the market to hit your stop loss to determine a profit take or money management position, you shouldn't really be bothered or have to decide or anything. It's just the market opens at 8 o'clock and you're there with your first buy signal on the basis of, you know, whatever, it's a gap to the upside or a break below a certain support level. You follow that, you put your stop loss in, and then you keep moving your stop loss accordingly. My father trades, he spread bets, he's 82, he trades all the time, got nothing else to do. When you get to that age, you've got nothing else to do. And so he trades, and the problem he has, he's a great trader, but he doesn't actually know how to move the stop loss. So he's been trading on these platforms for 10 or 15 years. His only mistake is, and I haven't been able to show him either, he just doesn't get it. He doesn't get it. He's never done it. He's never trailed a stop loss on a position. So you can be £200 or £500 ahead on a position, and he either takes the profit or he's then goes back and gets stopped out. So, but you know, literally the game is moving that stop loss or having it moved for you. And, you know, so on that basis, the conditions or anything else are sort of secondary to that, I think.
When you develop a strategy, do you give a higher priority to building entry signals, exit signals, or money management rules?
I think for me, increasingly, the money management rules are the most important, and they're also the most important in the sense that you look at a chart, and if you can't see where to put a reasonably tight stop loss, you can't really do the trade. So that tends to be, like say, there's been a bid approach for Smith & Nephew, it's up £2, and you can't put a stop loss any nearer than today's low, which is like £1 away. Well, you're probably not going to do a trade there. If there's, you know, there needs to be some nearby charting furniture for you to hide your stop loss behind. And so I think that in the end, there'll always be entry and exit signals, but it's really, or entry and profit-taking areas. But really, I prefer to go by the money management, and that's the aspect really that the market decides, and it's actually better if the market stops you out rather than you choosing a number and getting stopped out by 1 point and then the market going in your favor again. So the money management makes it much less personal as well, and people get demoralized by choosing a stop loss or choosing a profit target, just missing or just hitting, and you know, that's not nice. So that's the sort of the money management is always number one, really.
Do you favour any particular timeframes in your strategy?
I think I would ideally like to be going for the day trade situation. Overnight, if you've got a position which is offside especially, you tend to waste time in the next day looking for factors which will back your buy position even though the market's gone bearish, or vice versa, and it becomes a bit of a nightmare. I think either you're trading on a long-term basis, that you're buying ARM holdings at 8.50 and then you're looking to get out at £11. But really, I think there's enough movement normally in the markets to be a successful day trader if you have the correct strategy. And also, I think ideally, you know, with the indices, which I like, or even the FX market, between 7 and 10 in the morning is enough. The European Open is enough of a time frame to get it right or not get it right. And that's, you know, the moves are big enough these days. So you don't really need to be sitting there all day either. I think that with the indices, the FTSE, for instance, just be trading it from 8 o'clock till 10 o'clock. No point really going through midday. And then the open of Wall Street is such a nightmare. Until from 2:30 till 4, it's just all over the place. And there's almost no stop loss which will not be hit during that period. So in fact, the Wall Street Open, it baffles me how anybody can be involved in that.
Also, if you don't trade overnight, you sleep better.
Yeah, so no, it's just you're actually you are drained by an overnight position whether or not you actually know about it. It just seems to be something that if it's there, it's eating away at you passively. And you have either hopes or fears, which are in your subconscious mind, which will tire you for the next day and also skew which way you're looking at the market.
What should an inexperienced trader watch when choosing a time frame, do you think?
I think the inexperienced trader should really go for trading off a daily chart probably and taking it very slowly and in a small way, and not have something which interferes with the day job. I think it's probably the right thing to do. That if you're good at trading on a sort of, let's say over the couple of weeks or a month on a stock, maybe, and you make some decent money there, maybe you can think about being trading on faster time frames. But obviously, what most people do is that they get their 500 quid account at a spread betting company, start on Monday trading the FTSE, and by Friday they're on the back foot. And that's the end of the story. So, it's really, for most people, it would be better to trade on a longer term time frame, even if it's technically based and even if it's spread betting, to have a position which lasts a week or two, not trading intraday.